Welcome to our Life and Health Insurance breakout at the 2024 FSRA Exchange. My name is Erica Heemstra. I'm the head of insurance conduct for FSRA and your moderator for today's session. Thank you so much for joining us here today in the room as well as virtually. And I will just pause just for a nod from our tech crew at the back. We're live virtually as well? Okay, so I'm getting the thumbs up, so we'll just proceed. Before we begin, I wondered why they gave us this 10 minutes to introduce the session, because I thought, well, everybody already knows Eric and Swati and Kim and Robert, so what is this about? But there's a whole bunch of directions that they then gave me to read out to you. So I'm going to go through those first, and then we'll get going into our discussion. So hold tight. I just wanted to go over a couple of housekeeping measures. First, want to remind everyone that this session is being taped for future posting on FSRA's website. And also, we do have simultaneous French translation for those who wish to listen in French. So for those of you in the room, we can provide you with a headset. If you need one, just raise your hand and a staff member will bring the headset to you here in the room. And then for those of you attending virtually, simply click on your initials in the top right corner of your screen, select Set Language, and choose to listen in French. Just pause to see if any hands are going up. It looks like we can proceed, and hopefully those online can catch up with us. We do have an exciting discussion planned for you today. I have a number of questions for the panel, and we'll also be taking your questions during the last portion of the discussion. So please submit your questions through the conference site anytime during our discussion today. For those of you who are in person, if for some reason you can't make the site work or can't access the conference site, again, just put up your hand and one of our FSRA staff will come and take your question down for you. Our team at the back of the room will send the questions to me for our Q&A portion of the session. And if there are any questions that we cannot answer today, we'll post those responses on our event website in due course. And if questions are similar, we will group them just to get through as many questions as possible. Now, please allow me to introduce our expert panel for today's session. I encourage you to read their full biographies on the conference site. 3 chairs down to my left, we have Kim Hayes. Kim is the Global Head of Market Conduct Compliance for Manulife. Her primary responsibility is to provide leadership, direction, and support of the market conduct compliance departments across the globe around the execution of the company's market conduct compliance and examination programs. Immediate to my left, we have Eric Wachtel. Eric is the Chief Compliance Officer for IDC WorldSource Insurance Network. They are a large national MGA with 13 offices across Canada. He's also the compliance co-chair for CALBA, the Canadian Association of Insurance Life Brokerage Agencies, so I don't have to pay the $5, and sits on numerous industry compliance committees, including the FSRA Life and Health Stakeholder Advisory Committee. Between Eric and Kim, we have my esteemed colleague, Swati Agrawal. Swati is the Director of Life and Health Insurance Companies and National Supervision at FSRA. She directs the development, design, and implementation of regulatory compliance and end-to-end thematic reviews for insurance companies and their distribution partners. Swati is Ontario's lead for cooperative supervisory initiatives performed through the Canadian Council of Insurance Regulators, and she is also a Canadian representative at the International Association of Insurance Supervisors Market Conduct Working Group. I have to read this one out, though, it's fun. The IAISMCWG, where, I'm not done, where she co-leads the Diversity, Equity, and Inclusion, the DEI, strategic initiative to evaluate how greater consideration of DE&I can lead to better consumer outcomes. And finally, at the end of the stage here, we have Robert Pryor. Robert is Senior Manager of Market Conduct of Life and Health Insurance Agents at FSRA. Robert joined FSRA around the same time as me. I think he came in 30 days before I did or something like that. So we were brought into FSRA together in late 2020 to establish and lead a new and dedicated market conduct life and health insurance agent unit. I know many of you have gotten to know Robert over the course of the last couple of years, and you would understand how seriously and how well he's executing on his mandate to supervise the compliance and business practices of the over 60,000 life licensed agents that we have in the province of Ontario. Panel, our topic today is keeping the focus on consumers. What does strong conduct, culture, and effective oversight in life and health insurance look like? And I was so pleased in the plenary sessions this morning to really hear that messaging about keeping our mandate focused on consumers and focused on good outcomes for consumers in every one of the plenary sessions. And I think we'll probably just be continuing that theme throughout our discussion today. I think this topic really speaks to the essence of life and health insurance, which is really that promise to pay when something terrible, like a death or an illness, happens to a consumer or to a member of their family. Consumers want certainty that they are covered and that their claim will be paid should that terrible event occur. In short, they expect life agents, intermediaries, and insurers to treat them fairly. And adopting a culture of fair treatment of customers not only helps the industry to comply with regulatory expectations, but also to stay focused on protecting customers in their time of greatest need, which is the ultimate purpose of insurance. And this really leads me to our first question for the panel, which is, what is the role of the regulator, the insurer, the MGA, and the agent in staying focused on consumers and achieving fair outcomes? And Swati, we had you leading us off in this question.
Hi, everyone. You can hear me okay? So the question is, what is the role of the regulator, the insurance companies, the MGAs, and all of us when it comes to the consumer, right? So I have an interesting story. Just last Christmas, Beata Morris, she's the Director of Property and Casualty Supervision, and she's in the next room moderating a similar session. She gave me a memento which said, I am the regulator, I have superpowers. And you know, when you're enjoying your holidays and somebody gives you something like that, it's a feel-good thing, right? You feel nice. Wow, do I have superpowers? Really? Is that what a regulator is? And then you start pondering that what does it really mean to have a superpower? You know, what really drives this kind of superpower that we assume somewhere we have in our mind? And that takes me back to when FSRA launched. So 5 years back, when FSRA launched, you know, it was a white canvas for us. We were just thinking, what is it that we really want to do in this sector? And at that point in time, I remember having tons of conversations with Kim, with Eric, with so many of you in the room, where we said that if we really want to regulate this sector, we have to look into the entire ecosystem. Right? It wasn't just good enough to only look at insurance companies. It wasn't just good enough to only look at agents. In fact, by then, we didn't even have a full-blown agent team. And we had to look into the entire sales process because every component of the sales process has a cascading effect on what really happens in the end to the consumer. So that is where our journey started. And that is what we refer to as end-to-end distribution. And that is when we actually started doing a lot of different studies through the different layers and players which exist in the life insurance industry. Now, if I reflect back, you know, have we done a lot of stakeholder consultations in the process? Yes. Have we collected a lot of data, structured and unstructured? Yes. But the biggest bang for our buck actually has been going out on the field and conducting proactive supervision. Because when we go out on the field and we do this proactive supervision, that is when we collect a lot of empirical evidence, and that empirical evidence validates, the different types of deficiencies and gaps that we are seeing in the marketplace. So I think the superpower came from a combination of a variety of things, but actually going out on the field and learning what the different businesses were doing, what the different layers and players were doing, and how it really impacts the consumer. So fast forward, 5 years now, we are in a position where through the studies of all the layers and players, we've been able to determine the root cause of why consumer harm happens. We've been able to determine how consumers are being harmed, how vulnerable consumers are being treated, and how a better treatment of diverse, vulnerable, racialized minority consumers is so important in what we do through a combination of thematic studies which we did at the insurer level, at the MGA level, as well as at the agent level through Robert and his team. So with that in the mindset, now as a regulator, we are moving from what I call as the discovery phase to a corrective phase. We've discovered a lot of issues, but now we have to correct those issues. And I wouldn't get into the details of how that correction has to happen, but we've released a publication that explains a 6-point plan of how we plan to correct the deficiencies that we've seen in the marketplace. And I do believe that when those deficiencies get corrected, and when those deficiencies get corrected for the consumers at large, that is when just not a regulator, but we as an entire industry can claim to have achieved some kind of superpower, a superpower that will come from doing the right thing by the consumer and taking care of the promises that we all have made, either as a regulator or as an industry member, insurance company, or MGA. So that is what I think is the role of a regulator, an aspiration to be a superpower by collaborating with all of you.
Thanks, Swati. Kim, you were going to jump in and talk about your superpower as a company.
I don't have superpower written on my sheet here, but I do like the analogy. I'm going to look for that memento. I think the only one that I've received from a compliance perspective is a mug that says, "Don't make me use my compliance voice," which my daughter would attribute to as my mom voice. So anyway, thank you for the opportunity to be here and speak with you today. I really enjoy presenting, and it's great to be here with my colleagues. So from an insurance company perspective, obviously, we are one component of that distribution. And, what are we supposed to have? We heard it this morning, a reasonably designed compliance program. Well, what does that mean? How does that operate? How do we take the fair treatment of customers into consideration as we're looking at that? We've talked about it, like my programs at Manulife are designed around screening, monitoring, and reporting advisors. Part of that is educating them, talking to them. Unfortunately, a lot of it is about examining issues and challenges that present to us. But I would say specifically in relation to FTC expectations, and yes, I owe $5, a lot of it's been education, because I don't think that they saw that as something new for them. That's what they were doing. That's what they do when they sit in front of customers, is they believe that they treat them fairly. So it was about embedding that language in our code of conduct, in the business reviews that we do with advisors. And then internally at Manulife, a lot of it was about education from start to finish, that entire customer journey. So from product design and understanding who the best person is for our customer, or for that particular product, through to the marketing materials, to training on that product, to claims, to then complaints and issues along those lines. So it's really been an integration of a lot of factors over the last number of years to ensure that they're all there. And during audits and reviews, it's validating, that our advisors are understanding it. It's helping our MGAs understand it. I think that when the language first came out, it wasn't necessarily well understood. But we've had lots of opportunity for discussion and dialogue, so we're flexing our superpowers, our wings. Is that a good one? Okay.
Thanks, Kim. Eric, do you want to jump in from the MGA and agent perspective?
Yeah, and it's great, just to echo, it's great to be on this end-to-end distribution panel here for this important discussion. So, for the most part, MGAs are not client-facing. We heard Mark White this morning talk about how not many consumers know what FSRA is yet, and I think even less consumers know what a managing general agency is. So, but in terms of the role of MGAs in promoting positive FTC outcomes, 3 simple words, right? Knowing our advisor. We recognize that the carrier, Manulife or whoever it is, has a powerful lens into the type of cases that an advisor is writing with them. But with MGAs, to the extent that we have advisors who have multiple carrier contracts with us, certainly we have a wider lens into the business practices of that advisor, their trends, their knowledge of FTC, and the unique challenges they may be facing. Excuse me. So, what are we doing to promote FTC? Well, like one word Kim used there was training and education. So this is on the proactive side, right? As MGAs, we offer training and education. Which advisors are attending those? And certainly it's also a boon if you have online training and education, so you can easily draw up reports of who's attending, how long they're taking on each course, did they finish the compliance course and earn the CE credit at the end of that. But it's a good indicator to us to see, who is attending these courses, who's taking an interest, who's engaged in them, and who's not. Similarly, who's utilizing the MGAs, the tools, the compliance tools and resources that we offer as an MGA. The tools that promote frequent client contact, like client electronic newsletters, client relationship management software, and all the different cybersecurity tools that advisors can adopt in their practice. So are the advisors aligned with our MGA? Are they largely absent from engaging on these? And that's not automatically an indicator that there's a problem, but some advisors are an island unto themselves, and some of the most professional advisors are like that. But it's still something for us to keep an eye on and celebrate the advisors who are participating. And one positive thing I can say through the MGA lens is increasingly we have advisors or advisor groups or AGAs who will ask us to come and present to them. Can we do a lunch and learn? That didn't used to happen even 3 to 5 years ago. Rarely it happened. Now, so it's just an example of, like Kim said, FTC, like advisors thought they knew what it was, but they're getting a better picture of what it is now, and they're engaging. So another thing MGAs can do in our role to promote FTC on the proactive side is the advisor practice reviews that insurance companies are doing on advisors. At our MGA, we've had almost 300 advisors and mainstream advisors who are producing, who have been subject to an advisor practice review. And again, we celebrate the successes, the advisors that pass those reviews with flying colors, all greens on their report. But we want to look at that and see, are there any gaps? Did the advisor fail certain sections of that APR? Do they need to utilize some of our tools and templates and adopt them in the practice? We view this as an opportunity to get in front of the advisor with our business development executives and underline with them the importance of these APRs and passing them. And just anecdotally, another positive thing that's come out of those is, I heard this morning succession planning and advisors who are aging. And occasionally, an advisor, perhaps an older advisor, goes through an advisor practice review and does not pass. And when we engage with that advisor, we realize it was almost a silent cry for help. Like they want to retire. They're just very loyal to their clients. They're not really keeping up with their knowledge. And they need our help with succession planning. Or a more positive spin we put on it is business continuity planning, because that way the older advisor feels like I can stay involved in continuing this service for my clients, but perhaps align them. And it's great when at MGAs we can start thinking about that and introducing older advisors to younger advisors in various programs. So a couple other things I can state, but I want to give Robert a chance to talk. So.
Thank you very much. I promised Erica I wouldn't rap or sing, so I'll hold that back because she's giving me the eyeball right now, like, don't you dare. The beauty of going last when you have such brilliant colleagues presenting ahead is I can basically just say ditto. Like that was, I agree with all of you. From an agent perspective, that was mentioned earlier, is, there are 66,000 agents in the Ontario space right now, and I have a wonderful, strong team of 10. So what we have to look at and what the focus has been and what we're looking at end-to-end distribution is we have to look at who's at the front line. It's 66,000, so we need to make sure that suitability of an agent to be licensed is a priority, suitability of the sale has to be a priority, and how do we demonstrate what is working and what's not working, and that's to be evidence-informed and risk-based. So we focus our resources to where the risk is greatest. We have clear and concise evidence that gets reported transparently and is shared amongst everybody in this room. So we can all compare notes and say, we're seeing that too, or we're not seeing that, or perhaps this is the anomaly. So I think that's one of the major changes we're seeing is that incredibly collaborative approach to being a very evidence-focused compliance industry, not just regulator.
Thanks, Robert. And, the evil eye worked as I was, my superpower today is supposed to be keeping this panel on time, and so far so good. Thanks everyone for your comments on that question, and why don't we move it along? This kind of builds on this concept of end-to-end oversight and fair treatment of consumers. When we look at life and health insurance, really, one of the key defining aspects of the products are that they're very long-term in nature, generally speaking. And it's vital then that consumers are able to access advice to ensure that the products that they purchase today are suitable and will be there to protect their future financial needs. So if we think about that role, that key role that life and health insurance has in ensuring the financial security of so many Ontarians, how has your approach to ensuring that customers are treated fairly evolved since the CCIR and FSRA guidances were adopted? Eric, I think you were going to kick us off here.
Yeah, sure. So, I talked about the training and education. Well, that's only increasing, I know, at many MGAs, and in conjunction with our carrier partners holding events, and then taking a great interest in advisor APRs, which the frequency of which are only going to increase. So two other things is the staff training at the MGA level. So all MGAs, we have new business staff, and just having more and more frequent training sessions with our staff so that they start to adopt that compliance lens when they're ingesting business into our systems. So teaching them how to do that, and certainly many of the MGAs that I'm involved with at CALBA will use a model where each case coordinator or case specialist who ingests business, receives it and puts it into our system and forwards it onto the carriers, that they deal with their own group of advisors. So whether it's 100 advisors or 150 advisors, so they start to know their advisors' trends, their ups, their downs, and that's a good model to adapt. But getting back, I'm not going to get into a whole checklist of what a case coordinator will do when they receive a piece of business, but just teaching them things about like little warning flags that may require them to flag that up to compliance or to the business development executive who works with that advisor. So things like client income to premium ratio. Is it looking very, very high? So the premium for this case, is it a very large percent of that client's gross income? High rates of return quoted on universal life. especially if it's YRT and if there's a guaranteed early or if there's an illustrated early offset of payment. You know, or even something as mundane as, are all the health questions always answered no? You know, is the advisor maybe getting lazy looking at these and just kind of rushing to the end? So we view these as opportunities, you know, to get in front of advisors, especially with, again, from the business development executive, just to do a temperature check. Hey, we noticed this and we noticed that, and guess what? If we're noticing it, probably Kim's team is noticing it too at the carrier level. So, you know, you're going down a path here that you may be engaging in self-harm, and this might not have good outcomes for the client too, so maybe we need a reset here. So it's a great opportunity for us to increase the frequency of those contacts, and with our advisors, get in front of them, sometimes help them with some corrective actions, point them to a course they can take to get up to speed. And by the way, I feel like at the insurance company level too, at their business ingestion departments, that's not a bad thing at that level as well for, you know, new business people to understand that, yes, administratively you're doing this function, but there are key flags you can raise with your manager as well. You know, these reasonability tests. So that can help improve FTC outcomes. And then the second thing I talked about reactively is careful and organized complaint tracking. Okay, so, you know, looking for advisor trends, AGA trends, or even just market trends. You know, is there a certain advisor that's had a complaint from 2 different insurance companies? Is there an AGA where there's some complaints coming in pertinent to advisors with that AGA? Or is there just a certain product, like the new chargeback series? Are we noticing complaints with that? So, you know, we try to, at RMGA, we try to follow, you know, categorize complaints similar to what Robert's team would do. So, you know, our categories are business practice. So is this a business practice complaint? Something to do with privacy, AML, or something like that? Is it a financial stability complaint? You know, is a carrier emailing us saying, so-and-so advisor's credit score has fallen below 600. Can you please talk to the advisor, see what's happening? Is it a license and E&O complaint? You know, did an advisor write a case out of their province of license? Or was there a lapse in E&O, something like that? And then is it a market conduct complaint? You know, just the overall conduct of the advisor? Or a sales practice specific to a sale? So, you know, by looking at these things, and I just have to say, complaint may be too strong a word. Maybe it's not the best word because there's low, medium, high-level complaints. You know, traditionally a complaint is a client is unhappy with the performance of a product. Maybe it's a Manulife product. They call Manulife. Kim's team calls our team. We go get the advisor filed, okay? Not to single you out.
I'm saying that never happens.
It never happens.
No, not at all.
But, you know, they can be advisor concerns. But my point is, you know, it's very important for us to track these and understand where the patterns are so that we can, again, have those corrective discussions or design some compliance programs to fill a gap that might be out there. So, yeah, I think I'll leave it at that.
Kim, do you want to jump in and sort of build on Eric's comments on MGAs with insurer initiatives?
Sure, absolutely. Thanks, Erica. So since 2018, and I first met Swati, well, one of the first times, coming into the Manulife office to do a fair treatment of customers audit, lots of things have changed. We have a fair treatment of customers policy that promotes the importance of that process from, as I said, through that customer journey. So the beginning of the product design right through to the complaints and claims process. We've embedded language, as I mentioned earlier, in our code of conduct, in our business practice reviews or advisor practice reviews. Same thing, different title, different acronym in this industry, but into that work that we do with our advisors. We do have some courses, so we have a Fair Treatment of Customers CE Learning Center, 1-hour continuing education credit on our website that surprisingly gets like 400 and 500 views a year, which I think is absolutely fantastic. But some of the things that we've done internally are, things that you were chatting about, Eric. It's ensuring that the escalations from our complaints team or our underwriting teams or our sales teams are coming into the compliance area for evaluation and review. We have created an entire risk-based methodology tool that we are using data from all sorts of areas in our business to then select the advisors that we might want to come out and visit. And we're proactively reaching out to our MGA partners, so to yourself, Eric, and to some of the others that are in the room, to say, we're going to go and do a business practice review with this particular advisor. Did you want to come and hang out with us and go through this process with us? Most cases we're getting a positive yes, which I think is an advantage because it's helping the MGAs understand the expectations that the insurers have. But as you point out, Eric, it's also giving the advisors that opportunity to put their hands up and say, we might need some more help, right? Or we might need to be able to, put some additional templates in their office and things like that. Board reporting, it's reporting time, friends. It's like everything I'm doing these days. We speak to fair treatment of customers. We have a new sales conduct risk metric that is going in our board reporting for the very first time this quarter in 2024. This is a request from both OSFI and our board. So we are taking information that is being collected globally about conduct and putting a risk statement in our board report. I'll let you know what it says after we figured it out because we're still in the process of gathering all of that data. But things that are included in that, which is really interesting, is complaints that we've kind of talked about here, conduct issues, which of course we can all appreciate, regulatory findings that are related to sales conduct, and internal audit findings that are related to sales conduct. So all of these are newer things that we are putting into place. And the last thing that I would probably speak to is we have a new incentive committee. This is specifically come out of the various pieces of guidance that we've had around fair treatment of customers. So Manulife has stood up an incentive committee, so any new incentive programs, campaigns, time-limited bonuses have to go through a committee approval. And then there is a tracking process because, very selfishly, the market conduct team wants to ingest that. I'd like to know when we are doing an investigation on an advisor whether or not they have received compensation that's above and beyond the regular grid. Did that inform their sales practices in a different fashion? So we're looking at those things in a bit of a different way, using some technologies and some advancements to analyze all of that work. So we're bored.
Thanks,
Doing
Kim.
anything.
So I think we've heard a lot from Kim and Eric about how their organizations have kind of evolved in terms of some of the oversight practices and monitoring, but sometimes practices get reported to the regulator. Robert, do you want to jump in and talk about the evolution of the LAMR?
My favorite topic, and I could talk all afternoon, and you know that, so please shut me down. So the LAMR, the Life Agent Misconduct Report, some of you may recall something called a LARF, a Life Agent Reporting Form. That's a document, an excellent document developed by the CLHIA. It's been in use for 20 plus years. The industry knows it well. The LARF is 24 data points. In the main hall, we were hearing, the obligations of the insurers, to have a reasonable system of compliance, a reasonable system of oversight of agents, and there's also a piece of the act that says that there is an obligation for insurance companies to report unsuitable agents to the regulator, and that's traditionally been done through the LARF as a convenient methodology. So the LAMR has been developed with a little bit more of a FTC lens. So there's 141 data points in the LAMR. It's online, it's convenient uploading, all that sort of stuff. That's just a burden reduction thing. But I think what matters most is that there's 141 data points to allow reporting. We have done a lot of stakeholder engagement in the development of the LAMR, as well as since we've launched it, in terms of understanding what it means and what the industry's expectations of it are. So basically the question is like, do you want us to report this? Do you want us to report that? Do you want this every time? You know, I believe I've even heard, be careful what you wish for, in terms of like what type, what's going to be reported.
That might have been me.
I'm pretty sure it was you, and I think that's why I said it while you're sitting right beside me. So, but basically, a response that I've been giving is, you have an obligation for a reasonable system of compliance. You have an obligation to report an unsuitable agent. If you find an agent so unsuitable that you terminate their contract, we may want to hear about it. But what's also important is that the Act only contains so many actionable items for us as well. So you could report something that may not meet that threshold of us being able to revoke a license, let's say. But it's still a risk identifier. It still gives us pause to red flag, to conduct an examination. But more importantly, it builds data on that particular topic. That data that we build is something that will inform our proactive supervision programs. It'll inform policy initiatives. But like I'd said previously too, it's all shared. We're publishing on all of this to say what we're finding, to say this isn't anecdotal. This isn't just, you know, the industry is seeing this. It's not just the regulator seeing. This is what the industry is reporting. So that's that collaborative approach that we're really, really seeing the change there. And so the idea that, you know, this is FTC driven and it's principles-based regulation driven. I'm not asking you to fill out a prescriptive form, and here's the, although there are check boxes, but it's not a checkbox, you know, task. It is like, you know, report what works for you. So if you're reporting things, for example, like borrowing money from a client, strictly speaking, that's not a contravention of the Act, but boy, that's a risk concern, isn't it? And we want to hear about it. And I'm sure, I know that most, if not all, insurer contracts, sales contracts with their agents, says right there, you're not allowed to borrow money from a client, right? One of many examples. So with that data now coming in through the LAMR, it's something we can report back, and again, sort of implementing those changes. That requires 100% collaboration between the industry and a willingness to do that, because the industry could very easily just say, why would I report something you can't do anything about? Which is fair comment. So we're just saying, if we are FTC-based as an industry, if we are principles-based as an industry, then we need to share this data to implement these changes that everybody wants to see to protect consumers in the end. And the response has been amazing, to the point that, I mean, our LAMRs have more than doubled since FSRA's inception, and it's trending upwards as well. So thank you for sharing in the vision and participating in the vision.
I just want to quick shout out for that, Robert. And I don't know how many in the audience from the MGA community or carrier community have filed a LAMR, but it's really not egregious at all in terms of workload. So compliments to Robert's team who designed it, and the responsiveness as well. We recently had to file a LAMR and heard back from Debbie Scott within 36 hours. So, you know, the message there is it's very easy to do. You don't have to psych yourself up, and FSRA is definitely responding to these, so kudos.
Thanks, Eric.
Now our number of resources, Robert, will double to 20. Eric has put in a plug here for additional resources. They're very effective. We'll get a lot more LAMRs, Eric. That's the bottom line, right?
Thanks.
Sorry, just one last little thing as well is, you know, the regulation says insurers must report. It doesn't say MGAs must report, and yet the MGAs are reporting. You know, they don't necessarily have safe harbor, but that it shows the level of commitment in the end-to-end distribution level to, you know, to support consumer protection, that I'm getting MGAs filing LAMRs. That's very rewarding, and it says a lot about the industry.
Thanks. And, you know, Robert has some key members of his team here today who've been instrumental in developing the LAMR, so it's great to hear the feedback through the panel, and thanks to MGAs and insurers for continuing to file those with us. But we've got Sam, who's really been leading on developing the LAMR, and Andy and Debbie in the room. So if you've got more comments and questions about the LAMR as a tool or how we're using it, you've got great people to consult with here today in the room. And I think the LAMR, Eric and Kim, your comments about how your programs have evolved, that really speaks to, first, we heard it in the plenary, that role of data in terms of helping us to get an expert view of what's happening in the life and health insurance sector as a regulator, but also as insurers and MGAs, and really assisting with both our proactive and reactive supervision. And it also, I think, speaks to the evolution or kind of the journey that we're on with FTC and trying to get fair outcomes for consumers. And I think that's so important because fair treatment of customers as a principle, as our North Star, we often say at FSRA, really helps us to remember that behind every policy there's a person and often a family and their own story and reason for needing insurance. And so we've talked about kind of how we've evolved. Let's talk about today's initiative. So what are your current priorities in relation to treating consumers fairly? And I think, Kim, you were going to jump off on this one.
I was. Thanks, Erica. Yeah, absolutely. And we heard a lot about it this morning in the digital advancements and the use of AI and all of these tools. About 3.5 years ago, I was really fortunate and hired a gentleman on my team who is a data analyst. He's actually now a data scientist. And his role was to transform the way my department was doing work. We were very paper-based, and we've moved to be very digital. Because as much as you have 66,000, I believe you said, Manulife has over 100,000 just in Canada. That's a lot of advisors to have eyes on. So what better way to do this in a more efficient manner but to use technology? So we have a variety of graph analytics tools that we use that look to conflicts of interest. So if an advisor is the beneficiary on one policy, chances are they're likely the beneficiary on a few others. We can easily see that now. We use graph analytics to see, is the advisor using their own IP address to DocuSign paperwork, because electronic signatures have become the way we operate. You can buy a house with your electronic signature on a phone. It blows my mind, right? There's an importance behind your signature. We need to make sure that advisors and clients continue to understand that. So we've looked to use those advancements for our monitoring and our oversight. We also look at it to see, is this advisor just doing something that's really anomalous to the rest of the community? And perhaps once we go and get the story, we go, great, thanks, you've got all the documentation. It really is an appropriate needs-based sale. It works for that particular client or that particular community, and now we have no issues. But we've been proactively able to address that with the advisor and the MGA in advance. So those are some pretty unique ways that we've started to alter the way that we do our monitoring and our oversight of our advisors. I would tell you on my wish list for 2024 is to advance our business practice review program or our internal audit program. The fact that we are in 2024 and using an Excel spreadsheet just drives me crazy. So, you know, I've got the team turning their mind to something along those lines that can be a little bit more interactive, that can use some of these lovely technologies to say, oh, well, we found the advisor doesn't know what we mean when we say, do you use your advisor disclosure? And it automatically populates the finding so that the team isn't cutting and pasting for Word documents. So ask me a year from now how far we got. I'm really hopeful that we're going to have some time this year to make some changes there. So I think that's maybe where I'll stop, Erica.
Thanks, Kim. Swati, can you tie this into the work that we're doing at FSRA on the international stage, as well as our current MGA supervision priorities?
Thanks, Erica. A lot of things, Kim, that you mentioned, I've heard it from Robert. It was like a deja vu because it It freaks him out to have Excel spreadsheets.
When you said Excel, I got shivers.
And I know Sam, Andy, Debbie, they've been working very hard exactly to the mechanism that you mentioned. So though we mentioned about Lammers as an evolution, I still think it's a continuing, priority, which will take many different shapes and forms as and when we receive more from the industry. When we talk about the institutional side, there are two things that I would like to highlight. The first thing is, I said that in the last 5 years, we've been zooming in. So we look into insurance companies, we look into MGAs, we look into specific business models, we look into specific business practices, we've been reporting on that. So we keep peeling the layers of an onion, we are zooming in. But now, after 5 years, it's time that we also zoom out. And what I mean by zooming out is in Ontario, MGAs is not a specific licensing class. So we, as regulators, this morning we heard that we should be able to measure what we are about to monitor. We don't know who all the MGAs are. We don't know what their different business models are, what their product composition are. We don't know exactly which insurance companies are contracted with which MGAs. So I think as a regulator, it's very important for us to know what I call as our backyard. Right? Because until we don't know what our backyard is, until we don't know what our universe is, until we don't know how we can measure what we are about to monitor, how are we going to proceed, right? So that's one area that we are placing a lot of emphasis on. We are recently going to, we've just finished the design of a questionnaire, but we are going to launch this questionnaire, and all the insurance companies here are going to receive it. Lynn, don't worry, consultations are remaining, so we haven't disclosed that to you yet. But you all will...
I'm busy this month. Please not this month.
Okay, we'll work with your schedule. But we will be working with a lot of you in this room to actually consult on that questionnaire, which is actually going to give us intelligence about what's happening in the field. And what will we do with all the intelligence that we are gathering? That intelligence will help us identify the pockets of risk that exist in the marketplace, the pockets of risk that we are not aware about. There could be additional issues, there could be higher risk MGAs, there could be higher risk insurance companies. We just don't know what we don't know. So that's the intelligence program that we are going to launch. And if you have additional questions about it, we've got Kevin, Dinesh, and Guled in the room who can help you answer those questions, and I'm free of answering those questions then. The second piece that Erica mentioned was on the international front. I'm not from Canada. I've come to Canada a few years ago and never thought that I would be intertwined in the Canadian regulatory system. But when I was working on these Canadian consumer issues on the market conduct side, I started to realize that what we see in Canada is not unique to Canada alone. A lot of things, a lot of issues, a lot of deficiencies, a lot of problems that we are trying to solve in Canada, they exist across the globe. They exist in so many different countries. And we are very lucky that our CEO, Mark Wyatt, he's been selected to be the chair of the Market Conduct Working Group, MCWG, at the IIS, which is the International Association of Insurance Supervisors. So in that space, Mark had a very good thought leadership to this whole approach, where he said that when we talk about DE&I, why are we only talking about DE&I from an institutional perspective? Why are we only talking about gender? Why are we only talking about what happens from a governance perspective? Why can't we tweak our understanding to say, how can we, as an industry, treat diverse consumers better? How can we treat diverse, vulnerable, minority, racialized consumers better? So we started a very interesting exercise. There are 200 regulators on the Market Conduct Working Group internationally, and it's the cream de la cream of all the top-notch regulators being there. We asked each one of them to give us examples of how vulnerable consumers have been harmed in their country. So we got a huge repository of examples, and thank you to Deepa and Nathan who led that exercise from my team. And when we gathered all those examples, we saw there are so many distinct, parallels that we could draw in terms of what was happening across the different countries, but commonalities. So now we've embarked on an exercise where we are understanding what are the common trends that are happening globally, how consumers are intentionally being targeted, or things are not comprehensive enough for vulnerable consumers. And we are developing an application paper that's going to give all of you, insurance companies and intermediaries, some very practical recommendations on how diverse and vulnerable consumers can be better treated. So again, we look forward to having a lot of consultations with many of you in the room on both the exercise, on the Ontario-related intelligence program, as well as the international application paper, which is going to be a great toolkit for all of us in the room.
Thanks, Swati. So,
Can I just comment on that
Yes,
for a
of
second?
course.
So since my role moved to be global late last year, it was very intriguing, and you're just speaking exactly to what I have been learning over the last number of months. Everybody thinks that it's always very different in their country. And very quickly, I came to the same understanding that it's all really quite the same with just some general nuances. So I'm going to be very intrigued to see where this application paper comes in.
See, I said I had superpowers. I could intuitively understand what Kim was, working on, despite of not knowing it.
Perfect.
it is interesting how it all ties together, right? So we've got international trends and consumer issues, and seeing them perhaps played out perhaps differently, perhaps not, depending on the country and the market and the product. And we continue to see that role of gathering data in order to inform our supervisory priorities. And then you've got to bring it back down to that agent on the ground. At the end of the day, if you're thinking about individual life and health insurance, it's typically an agent that a consumer is interfacing with. And Robert, your team's done a lot of work to really drive kind of intelligence-informed agent supervision. Do you want to spend a couple of minutes talking about that?
Sure. So we discussed the LAMR, so that would be industry's obligation to report unsuitable agents to the regulator, and the data that helps what we're driving there from a data analytics perspective. Our bread and butter, if you will, is agent examinations or audits or whatever title you want to give it. So we had developed a examination program. I always get the numbers wrong. There are 710-point examination with 2,282 data points, including a 48-point questionnaire with attestation. That's all electronic, because if I saw another Excel spreadsheet, I was going to die. So we've moved that to electronic, and that's what's been launched now. So I mean, there's the typical side of it, which is reduces burden, increases accuracy, makes sure you're asking the same questions, so that any person who's operating that particular, it's on something called OSP, on online service portal. So if anybody who's operating that OSP platform is going to be done the same way, so we get good, clean data that we can report back to the industry, publish on, and then we have those collaborations, compare data, because my colleagues here are doing the same thing, just from a different side, different lens. And let's see if we're all noticing the same things. But I think, and this is all good, this is good information to have, and it's something we can collate and collaborate on. But what we started to do was also look at, from an FTC side of things, it's not just about strict compliance with the Act and the regs and even the guidance. Like, what we're looking for is, like, are you a suitable agent, and are you making suitable sales? Are you doing what's in the best interest of the consumer? And one of the easiest ways to demonstrate, or at least help demonstrate you're doing that, is to follow best practices. Like, it's very simple. Here's your baseline of expectation. Are you taking notes? Are you doing needs analysis? Are you doing financial analysis? Are we following the best practice? And if we follow the best practice, then you are in a better position to demonstrate that the sale was suitable, that you had a comprehensive conversation with the client, and that the client understood what you were selling them. Like, that's the driving factor of it. So that's something we've captured heavily within our examination program. It's something that we have tipped our hat to, at least in the LAMR program as well, as these are the types of things you can report. Even if we can't necessarily do something about it, let's keep collecting that data to show this is where we're seeing a gap in the industry. This is where we're looking at policy change legislative change, whatever the case may be. And so it allows us to support that. And yeah, I think that testing to best practices is something that, again, the industry is very on board with because they see the importance of it. So the next sort of stage of that is there's our examinations, which tend to be reactive, something that we'll do if we receive a LAMR, we'll go do an examination. There's proactive, which is where we're doing something thematic, like the MGA reviews was very specific. There are intelligence-focused examinations, which is another form of risk identification and thematic review. But we're also soon going to be sending out something called, because you need another acronym, this one's BPAC, and it's...
You weren't rapping?
See, I told you. It was such a setup, I had to rap, and Erica said no. Anyway, so the BPAC is the Business Practice and Compliance Questionnaire, and this is going to be distributed as something that's not risk identified. This is something that's a little truly more randomized. Because I think it's important to demonstrate to the industry as well, is like, we're not out just to catch bad acts. Like, we also want to catch people doing the right thing. That's important. With 66,000 agents in the space, I am highly confident that there's some really good agents out there, and they need to be highlighted as well. So sending out something that's a bit more of a randomized, not risk-based approach things creates that... what's the word I'm looking for here? Baseline.
Baseline.
Thank you. That's the word that would
benchmarking.
not go into Robert's head. A baseline survey, and part of that baseline we're going to be asking is about business practices. And now the BPAC is going to be signed by attestation, so I'm hoping everyone tells the truth on it. We have actually had such circumstances where agents we've given them an administrative monetary penalty, and they've actually thanked us to say, I didn't know that I had to do that, and I'm going to change my practice as a result of that. So the idea is that it is an educational component. It's not about catching bad guys all the time. It's not about pointing out what people have done wrong. It's pointing out what people have done right, and using it as a learning opportunity to improve overall business practices, and that runs end to end, and then we support each other in that quest.
Thanks, Robert. I have to say, first he said he wanted to rap, and then I thought I misheard him when he said bad act, and I was getting a little bit nervous as the
See
moderator.
the mic tip up like this. That's when you have to worry.
Let's keep going here. We've sort of looked at the past, we've looked at the present, we're going to get into the crystal ball part of the session here. FSRA is going to turn 5 this spring. And as Swati said earlier, in life and health insurance, we are really continuing on our multi-year sector strategy to really establish and operationalize FSRA's approach to supervising the end-to-end distribution of life and health insurance products. And the outcomes we're driving for here, the consumer outcomes we're trying to achieve in all of this work, first of course, is suitability of the market participants in the sector, and we've talked a lot about that already, I think, on the panel today. And then more so in the last question, we were talking about business practices, right? So the outcome you're looking for here is business practices that support fair outcomes for consumers. And of course, we do have to mitigate specific risks where we find them. If there are specific risks due to business practices or products out there when it comes to consumer protection, of course we need to seek to mitigate those risks. And so if we look ahead to the next 5 years, once, when we're all here together, when FSRA turns 10, what does the future look like? How will it affect consumers, and how are you preparing for it? Eric, I think you were going to lead us on this answer.
Sure. We heard this morning during the AI discussion, this great technological marvel. And, in this technological miracle of an age we're living in, it's interesting on the first point that our experience is that consumers are relying on their agent more than ever before. Yes, they have electronic means to research and get information, but this technological marvel is also leading to a certain degree of laziness, right? And one thing I always say is people don't open their mail anymore. Mm-hmm. How many people have their credit card on auto pay? Do they really look at their statement every month? And a simple complaint like someone getting a 10-year renewal, never opened it. 3 months later, they look at their bank account and see they're being charged quadruple the premium. So to a certain extent, you know, we take it seriously and we impress upon advisors that, you know, when a client says, you're my guy or you're my girl, they really mean it. And, you know, to Robert's point there, just about, you know, something as simple as the approach, following the approach as a best practice and having those 7 key compliant aspects in your client file, it's amazing how hard it is to get in trouble if you're following the approach. Even from a self-inquiry standpoint, if the advisor's doing an engagement letter with the client, if the advisor's doing good reason why letters, it requires some self-reflection, and the advisor can often correct themselves, say, you know what, I have to relook at this case here. But going back to the question, so how do I expect it to evolve in terms of suitability of market participants? Well, you know, we're already seeing that FSRA's licensing team is looking more closely at renewals, at license renewals than ever before. And we have to explain to advisors, yes, you need to upload your CE credit certificates. It's not just an attestation anymore. So, you know, I think we can expect this to increase and more scrutiny given on this valuable thing called a life license. And, you know, are we going to see more advisors who perhaps exit the industry? Because, you know, we have to say that some AGAs we're seeing are looking at their advisor population saying, well, this bottom third isn't doing anything. They're just hanging around. And before that was okay, but now with all the industry scrutiny, that's becoming a risk to us. So I think there's going to be some attrition there. In terms of business practices that support fair outcomes for consumers, you know, Kim talked about it, Swati talked about it, Robert talked about it. Just, you know, knocking on the advisor's door, asking them, you know, what are you doing in your practice? And we've seen some insurers do some little creative maneuvers. Like one insurer now, instead of a standard advisor practice review, they're doing desk audits. Oh, you just submitted a case for us. Can you please provide us with the best practice documentation behind this case? Kind of a snappier, real-time audit, which is catching some advisors off guard, which is a good thing, right? It's ruffling some feathers. Wow, yeah, this is real. This is coming home now. And even things like audits, you know, that's a great initiative, Robert, you spoke about. We had a little story. We had an advisor who was audited by FSRA, dual license advisor for mutual funds and life insurance, great practice, has a great staff. He passed with flying colors, but he commented, because he had just gone through an MFDA audit, and he commented on how impressive the audit process was. And he said, you know what this auditor asked me at one point? She said, how do you decide which insurance company you put a client with? What a great question. And he was impressed that the auditor knew enough to even ask that question, and he was able to pull out several client files and say, well, once we decide on a level of insurance they need and a product structure they want, we do a life guide spread, and here's how it starts. And we don't always go to the cheapest company. We talk about features and benefits, my relationships with underwriters, customer service, things like that. But he just said, wow, that's a great question. So catching advisors doing stuff right is something that we can expect more to happen. And then number 3, in terms of mitigating specific consumer risks by targeting practices and products being recommended that create higher risk for consumer harm. I think we're going to see in the next 0 to 5 years is collectively we are going to have to look at strategies, right, that are being touted out there. I'll pick on a simple generic one, leverage investments, which for whatever reason, anecdotally from my lens, we're not seeing as frenzied a rush for consumers or advisors recommending leverage. But I can recall in my career almost having to do battle with a bank wholesaler in terms of why I was disallowing this particular leverage investment case. With the bank wholesaler saying, look, the client qualifies for this $1 million. And trying to explain, yes, but that doesn't mean it's reasonable for the client, given their parameters, their age, their risk tolerance, their overall income, their wealth profile. That doesn't mean it's a reasonable case for them. So at a certain point, you know, we have to recognize, like here I am, the MGA, trying to control that. The banker, just like our climate expert there on the stage, said, wow, you can't insure a house in a floodplain, but you can get a loan to buy one. That's not consistent, right? That's an inconsistent message. So here, if I'm trying to mitigate a leverage case that may be egregious, well, the bank wholesaler wants to sell debt. He wants to get the maximum debt out there. The insurance company wants to sell units of seg funds. That's out there. So I think it will help. You know, it's a fantasy to think that I, as the MGA compliance officer, can stop that by myself. If the industry itself, at the carrier level, at the regulator level, doesn't kind of at least put forth an opinion to say, you know what, these are the 9 dots. You know, if you can look at the MFDA, which has a pretty reasonable way to calculate what a reasonable amount of leverage would be and what might be offside. So you're looking at the client's risk, their debt service ratio, things like that. But it can't just be one entity in the distribution chain that's trying to control that. Everybody needs to kind of put that line in the sand. So, yeah.
We've got some seg funds guidance coming that you're going to get excited about, Eric, when it comes to leveraging. Robert, do you want to jump in and talk about the future of agent supervision?
Sure. So I already touched on some of it in terms of, you know, we have shifted our entire supervision process to OSP. So we're 100% digital now for LAMR receptions, examinations, the BPAC going out. Where that's expanding out is something we mentioned earlier. Is there's 66,000 agents in the space, and I have a small but mighty team. We need to leverage technology heavily. By leveraging technology, not only are we looking at process efficiencies and burden reduction, and that's on both sides. It's not just the senior compliance officers who are processing these, these reviews and investigations, but it also is on the industry side, encouraging the industry to report because we make it easy for them. That's the idea, right? To reduce that burden. But at the end of the day, that all needs to be boiled down to something. So 66,000 agents, limited resources. How is it we determine what we do next? So by maximizing data, big data analytics, and being able to, you know, distill that down and identify risk and direct resources where that risk is greatest, that is the future, and the future is now. We're doing that now. What it is now is growing the capacity to, you know, maximize those as well, and also to share that data back out again. So in the meantime, we have to be realistic that we're not going to hit 66,000 agents every year. It's not going to happen. So we have to take sort of a trust and confirm approach to things as well. So yes, we have self-reported data. That self-reported data is through questionnaires such as the BPAC. There's a questionnaire that also goes along with the examination program. There's an attestation at the end of that. You're swearing to its content. So you may be part of an exam where we are going to confirm the content. You might be part of a BPAC, which is a broad-reaching questionnaire and may or may not have a follow-up examination, but that attestation means something. So there'll be a test and confirm approach to it, or a trust and confirm approach to it as well, that we have to broadly believe that there are good agents who are going to report accurately, and then we'll be you know, confirming those who aren't and reporting that back again. And that's just a realistic approach when we're looking at a large number. But in terms of the future, I mean, we've already implemented AI into to our programs, mostly for burden reduction purposes. We're seeing the industry has shifted heavily to electronic applications. We're looking with agents when we're doing examinations that their files are stored electronically. That's now ballooned into, so what cloud are your files served on? Are they within Canadian borders or not? Is that a concern to the industry? Is that a concern to the regulator? These sort of things. These are the conversations that are happening. That expands out to CISRO, CCIR levels, having those conversations as well. So it's growing rapidly. Where I see it as a very positive is that data is knowledge, and that knowledge gives you the ability to make good decisions. And if everyone's now moved from what you said earlier, like everything was paper driven, right? And everything's now shifted, that it's now easier to process and analyze that data to identify harm or identify agents doing great work, then that's something that we can leverage and have, you know, to raise the industry up entirely. So I think an adage that I like to use a lot is like, how do you eat an elephant? One bite at a time, exactly.
Kim, want to jump in with the company perspective?
Not from the elephant perspective, no. I've touched on a lot of it. You've spoken to a lot of it as well, Robert, about how we are changing the way that we are monitoring, how we're using data. Just a couple of kind of follow-up points to some of the things that I've already said. While we may be using this data for our advisors, please understand we're also going to be rolling it up to see what firm are they with, what MGA are they with, what AGA are they with, because that might then influence the conversations that we're going to be having, or the interactions that we might want to have with those firms. I think our advisors' practices have shifted, but will shift monumentally with the use of technology. You talked about notes and things along those lines. I don't understand why advisors aren't taping some of their phone or their meetings and using those as their sources of meeting notes and things along those lines. But then how do we make sure that it's secure? How do we make sure the advisor understands, yes, where is that data cloud? Do you know how to have access or restrict access? Does your assistant that you just fired yesterday still have access to all of your systems? Have you made sure to take care of all of those things? Cybersecurity is probably it is the number one behind licensing issue that my compliance team is dealing with. So advisors who have had their emails compromised or their clients have had their emails compromised, this is only going to continue. So there's a whole education that I believe needs to occur for advisors and for clients about data and protection and the use of these technologies that are very quickly becoming commonplace for all of us. I was a part of a very large ATO account takeover situation going back about 2 years now. And we were talking with the E&O carrier, and the E&O carrier had just completed a survey of their advisors who purchased their insurance product. And the number one password was still password 1234. No. Really, right? Not password. That was number 2, I believe. But how do we advance all of these things that are to the betterment of all of us, from the MGA to the insurer to the regulator, but then also keep the customers fair and protected? So those would be my closing.
Thanks, Kim. In the interest of time, I think we're just going to jump ahead and do our last question. So we've got a bit of time for Q&A. If you've got a question and you haven't submitted it, I'd encourage you to figure out the site and submit it now so we can take it in a couple of minutes. I'm hearing a lot on the need for education, on the need for security, on the need for data protection. Another theme that I think is coming out of every single one of the questions we've discussed today is collaboration, and that collaboration is key, that we're stronger together when it comes to achieving fair outcomes for consumers. And it's really important then to learn from each other. It's important for regulators to learn from industry and vice versa, and to really appreciate each other's perspective. So a challenge to my panel is for our insurer and MGA reps, if you could put yourself into the market conduct regulator's shoes, what learnings would you share? And then for my FSRA colleagues, try on Kim and Eric's shoes for size, and what learnings would you share? And Kim wore some doozies today. And I'm also going to give you an additional challenge of trying to do your response in maybe 1 minute each, so we still have time for Q&A. Kim, do you want to kick it off?
Okay, in 1 minute or less, I was actually going to say, and Swati kind of stole this through her comments about an industry level, is learning from the examples and the experiences that are occurring all around us and using that to inform the shape and the way that our industry moves forward.
Robert?
For those of you who don't know, I come from industry, so I've seen sort of both sides of it, and I think it's important to recognize that people in the compliance world are genuine. They genuinely care about consumer protection, about doing the right thing, and I think it's easy to get lost in this idea that, insurers are just out to make money. It's just commission-driven and sales-driven. It's like, well, yes, it's a business, But the compliance side of it can still be genuine. And on the regulator side of it, it's not the big bad regulator coming in, not connecting as well. Like, this is all about collaboration. Like, this has to be done together. We have to see that, there's a reality that tens of thousands of transactions occur every day within an insurer. So the regulator can't look back and say, well, how did you miss that? The regulator should say, how did you miss that? Let's learn about this together. What can we do to help? And so I think it's really understanding each other. Point of your question, like that you are seeing it from both sides of it, and I think sharing that information, sharing the mistakes as well as the victories is very important, because I've said this at other stakeholder engagement events, a rising tide of compliance raises all ships.
From the MGA perspective, what we would like you to know is how important we think the work is that you're doing with LAMRs, and hopefully that you can triage those, because at the ground level as an MGA, if we see a real bad actor and we have to quickly reassign those clients to a new advisor, and meanwhile that advisor is still running around speaking to those clients because nothing's yet done, it places us in a hard position. But obviously we recognize you have to cover yourself. There's certain legal things you have to do. But we just respect that work and wanted to give you that insight. And then the second thing is, maybe this is more for CLHIA, but the industry in general, is the electronic applications. There's so much potential to add FTC into them. Something as simple as there's a small insurance company out there, I won't name its name, but they have a dedicated sales force. And it was interesting, I know someone who's in that company, and the application, if the advisor tries to submit a case where the premium is more than 12% of the client's gross income, it freezes it. There's a red flag on it. Not to mean that there might not be a reason for that, but it has to be approved at a higher level. So things like electronic applications that can stop something. If an advisor is writing a case on a client who lives in Alberta, and the client goes to sign it and says signed where, Alberta, and the advisor's license is Ontario, that application should freeze that case. It shouldn't allow it to go through, and now the insurance carrier has to report to the regulator that this was an extra jurisdictional case. So couple of points there.
Last FSRA exchange, the last question was, what makes you successful as a regulator? And I had mentioned about 5 C's that I think, make us successful as a regulator. If I were to put myself in Kim and Eric's shoes, big shoes to fill and fancy ones too, but if I were to put myself in their shoes and I would apply the same 5 C's to them and then see what learning can we have for the industry. So the first C is courage. I think both Kim and Eric, representing insurance companies and the MGAs, have had a lot of courage to accept the problems that we've identified. They always say to solve a problem, you first need to identify and accept that there is a problem. All our thematic studies, all our reviews, all the problems and deficiencies that we've identified, them being the stalwarts in the industry for many, many years, still had the courage to accept it. The second thing, competency. Both on the insurer side and on the MGA side, I see Kim and Eric continuously striving to improve the competency of the people that they are working with, to ensure that we are meeting the regulatory requirements, just not the hard-coded rules, but also the guidance, the spirit of law to serve the consumer better. And I'm sure, just like Eric and Kim, all of you are doing that in the room as well. The third thing, the third C, communication. We are constantly talking. You can even see through the banter that we have here. We are interacting. And insurance companies and MGAs are just not interacting with regulators, but they are also talking amongst themselves to understand how best to serve the consumer. The fourth thing, consistent approach. I know that insurance companies and MGAs, and both Kim and Eric, they are on our stakeholder advisory committee, technical advisory committee, so are many members in this room. You all are constantly striving to understand how best we divvy up the roles and responsibilities to make sure that the right effect gets passed on to the consumer. And the last thing is the moral compass, the North Star that Mark mentioned as well this morning. All of this, we understand that we are in the industry, bottom lines are important, profitability is important, growth is important, but doing it the right way is also very important. And if I were to place myself in Kim and Eric's shoes, Ever since I've started in Canada in the life and health insurance industry, I've seen them both follow through that North Star. So I would just summarize that the combination of, having that courage, competency, communication, consistency, and compass is what we can learn from Kim and Eric. And if we all in the industry implement that, we definitely will be a super powerful industry together.
Thanks, Swati. I'm just going to do a check with at the back of the room. I think we have about 5 minutes for Q&A. Okay, and we've got one up here. I'll read it out, and then I'll let the panel decide who wants to jump in on it first. What is the role of life insurers to ensure that their products are designed appropriately for their target market? With increasingly complex products being sold to mass market households, who is really responsible for the suitability of the products, or we could say perhaps the suitability of the advice? Who wants to jump in on that?
Well, I can start. As I mentioned in some of my earlier remarks, at Manulife, our product design does include the fair treatment of customers as a creation component. So we are, doing market studies to determine who these clients should be, or in some cases shouldn't be. The complexity of the products being sold, to me, very honestly, it's a joint responsibility. The advisor has the responsibility to complete a needs-based sale that is right for their client. They need to understand the product that they are selling. They need to be able to explain it in a variety of ways to their client. And then they need to complete, in my opinion, a really great reason why letter so that the client can remember years later why it was that they purchased what they purchased. That's the advisor's responsibility. I see the MGA having a responsibility for ensuring that, it's not everything the advisor is selling, because again, as an insurance company, I can only see Manulife product. I can't see Sun, Equitable, or any of my other colleagues. I can't see what's happening there. And then from the insurance company, again, using our tools, we should be going to those advisors to say, why are you selling this? This doesn't appear to fit inside the client base that we were expecting. What is your rationalization for that? Help us understand. And folks, in some cases, their answer is appropriate. In other cases, the answer is, that's probably not great. How can we remediate this? What should we be doing for the clients that have already got the product, and what should we be doing with you go forward?
I just want to quickly add to that a product is a thing, right? It's like a car with no governor. For those who aren't from car culture, like a governor will dictate it can only go up to a certain speed. So I think, as I mentioned before, collectively, we have to look at these products like, say, whole life. It's a thing. It's designed for a marketplace, but it can be used in so many different ways. And so collectively, we have to decide. Like if someone's putting 40% of their income into one product, we as an industry have to start to look at that and say, okay, is that strategy, is that going to lead to good long-term success? It could, or it could not. But I personally believe we can't just leave it to MGAs to put that governor on those products, because they can be very dangerous if they're used the wrong way. So in this game of whack-a-mole where one MGA will say, well, I'm not comfortable with that, advisor moves to another MGA. That game of whack-a-mole has to stop. So I think as an industry, if we can look at the strategies and come up with certain parameters for that, that would be helpful.
And I think one thing to remember that, one of our principles, which has been a very important principle in, our Bible when doing market conduct regulation, are the ICPs, the Insurance Core Principles, which have been established at the IIS. And Insurance Core Principle 19 is the Bible for market conduct. And 19.5 specifically talks about, how insurance companies when they design a product, they need to think about who their target market is for their product, appropriate as well as inappropriate. Kim mentioned that there is some kind of baseline target market. Not all insurance companies that we've seen it have it. So it's important to establish it, to set it. There can be exceptions to the norm, but the exception cannot become the norm. And then ICP 19.5, read through it, it also delves deeper into how insurance companies should communicate that target market to the MGAs and how the MGAs, based on their work with the advisors, are required to report it back to the insurance companies such that you have the right checks and balances in place. So we have a lot of good guidance and principles around it. It's time now that we operationalize it.
Thanks, Swati. We're almost out of time, but we've got a great question on the board here about compliance from the advisor's perspective. So I'll read it out, and then Robert, we'll start with you and just send it down 30 seconds each, maybe. So from the advisor's perspective, are the compliance functions seen as an impediment to doing business? How can MGAs and insurers ensure that advisors are incented to do the right thing? Robert.
I've heard the comment that I don't make any money doing compliance, from when I was in the private sector as well as in the public sector now. It's like, I'm here for sales. I don't make money when I'm filling out reason why letters and all this sort of stuff. And I'm sorry, you're a licensed professional. You have obligations, and you need to complete your best practice steps. But what I always put back to people now is, if you're going to sell your book of business and get good money, top dollar for it, don't you want to make sure that it is completely compliant, that you have followed, you can demonstrate with every single sale that it was a suitable sale because you followed best practices within it. That's how you maintain book value. That ought to be one of many incentives, but that is definitely one of your incentives. Like, that's your retirement plan there when you sell that book.
No. Sorry. Yeah, elaborate. How can we? Well, we can ensure by making. I think that we can help advisors by making sure that they understand what the best practices are that we are expecting them to adhere to, helping them very quickly, perhaps very early on in their careers, course correct, make adjustments where required, so that they are insulated. I always say to advisors, it's not if you get a complaint, it's when. And I have seen complaints go away because they have amazing notes and reason why letters. So if we can help them understand that, then I think we've done a good job.
I think in the short run, maybe, but we are not here for the short run, right? I mean, a life insurance policy is a very long-term policy that we are buying, and if you serve your consumers right, I think it's only going to prosper your business in the long run. So I would keep that, again, as my North Star.
Yeah, and at the MGA level, for advisors doing business who want to do the right thing, they've reported to us that these actually help them do more business. So following the approach wins them cases, and it gets them more referrals. So what we try to do is enhance those success stories and spread the magic and let advisors know that this isn't some cryptic form you have to apologize to a client that you're shoving it in front of them to sign. This is something that can enhance their understanding and make sure that, God forbid, if they're in a coma, their family will understand what you've done here today. So it should be a positive thing.
So we are out of time, and we've actually gone a couple of minutes over time, and you're clearly a compliance crowd because you all stuck around. So thank you so much for being here. We hope you found value in the session today, both being here in person and for those of you who are attending virtually. We would ask from FSRA that you please take a few minutes to complete the conference survey on the conference site under the heading of feedback. That's really helpful to us. It helps us to plan next year's exchange to make it hopefully even better and more successful than today. Also, please join us in the main area for a short reception. That's just where you came down the escalators. We'll have a short reception. There's a cash bar and light food. It's really our chance to continue today's discussions and do a little more networking before we head home. But before you head out of this room, please join me in thanking our panel for such an informative and engaging discussion.